Hello all. In this video, we are going to talk about RBI Bulletin. Each month, RBI publishes a report which talk about some fundamental data of market and economy. So I have already gone through that report and I have summarized some of the charts that are important. And I will talk about that chart in this presentation, this video. So before we start, this video would be only for educational purpose and we are not giving any buy-sell recommendation in this video. The first chart that you can see over here is the real GDP chart. The real GDP growth chart you can see. So this is the data from 1980s to 2026 till now. So you can see a gradual increase in the real GDP for the country. Earlier, the real GDP was used to be about 4-5%. Now, currently, we are about 7.6 for the FY 25-26, and we are above the trend line, the long-term trend line that you can see. The other chart is about this is the rolling return of data for the real GDP. So there has been acceleration in the 10-year rolling average for real GDP. So this tells that there is a consistency in real GDP growth in decadal terms. So there is no lost decade for us. We have constantly increasing our growth on 10-year basis. So the next chart over here is the GDP per capita for the country. Also over here you can see a gradual increase in the per capita GDP growth for the country. Earlier it used to be about 2-3%, 4%. Now we are at about 5.5% above the long-term trend line. That is one of the positive signs. The next chart over here you can see the population growth. There has been decline in the population growth for the country. So both there is the real GDP growth happening. Also there is a population decline which is happening. So it is improving our GDP per capita, the growth for GDP per capita. That is happening. So the next chart is the India's GDP as a percentage of global GDP. So we are gaining our share in terms of GDP contribution to the world. In 1990, we were about 1% of the world GDP. Now we are about 3.5. This is the data for 2024 only. So in the last 2 years, we might have also increased this contribution to the world GDP. Same, the GDP per capita we have been gaining share. The relative prosperity is increasing for India compared to the world. So it is about 20% now. This is data for 2024. Things have been, improved a lot. That is there. So this is the fiscal deficit discipline that the government have shown, the Indian government have shown. So there was a great debt that we had in 2022 in COVID times. In 2021, we were about 13%. The fiscal deficit was 13% as compared to the GDP that we had. Since then, we have been consolidating our debt compared to our GDP, and it is showing the discipline that we are showcasing towards reducing our fiscal deficit compared to our GDP. Now it is about below 8%. That is there. There has been trend towards increasing capital expenditure by the general government out of the total expenditure. So capital expenditure is increasing. It is quite good to have a multiplier effect of this capital expenditure to increase our GDP. The same data. This is the total percentage of total expenditure, and this is the data for percentage of GDP. In terms of GDP, the CapEx that we are doing, it will also increase the share of GDP. 5.8 capital expenditure as a percentage of GDP. This is the PMI, the manufacturing plus services PMI. So PMI is basically the survey that is being done across managers who are forecasting their business, the business demand that is there. Above 50 is positive sign, so we are the second highest in terms of composite PMI across other countries. So it is quite good sign. We are about 59% the month of Feb, and also for the month of our export order PMI. So managers who are giving an outlook for the export orders. So we are the highest among other countries. The survey gives this positive sign for the export orders that are likely to come, and managers are feeling good about the export order that could come in. So that is a positive sign. So bank credit that is going towards different segments. So the credit which is going towards personal loan, the growth is about 15% growth for the month of over here till June 2020, Jan 2026. Jan, the credit towards industry was 12.1, credit towards agriculture was 11.4, and credit towards services segment was about 15.5. So clearly, credit towards services sector is 15.5, the highest, and personal growth is a personal loan toward credit to personal loan is also highest, about 15%. This is the sales growth data for Q3 FY26. Well, there was a significant increase quarter on quarter in terms of growth for IT. There was also growth for manufacturing quarter on quarter basis. So in gray it is a Q2 FY26 data. In red it is Q3 FY26 data, the latest quarter. So this is the data for last 1 year, and this is the data for financial condition, the liquidity in the financial system in India. So currently we are at the tightest position compared to the last 1 year. So there is a bit of liquidity tightened. There is not much liquidity in overall 1 year time frame. This is the banking sector information. This is the non-performing loan, the total loan that is there. So India has about 21% of non-performing loans, and there is the data over here. China is 1.5. Non-performing loans are less for China, and over here for Taiwan, Brazil, South Africa, it is quite huge. 2.9% are non-performing loans. The gross NPA data, average gross NPA is, gross NPA is non-performing asset before we are considering any provisions and all those things. The average gross NPA is about 1.9, currently 2%, 2.1 for FY26. Next year it is expected to be reduced, the NPA 1.9. So expectation is good that the non-NPA will, the NPA assets will decrease. Next slide is about volatility index. So recently there has been war which had happened. So there has been greater impact in emerging market. There is greater increase in emerging market VIX. Then comes Europe market VIX and less impacted VIX. Less increased VIX is US VIX. So clearly emerging market have affected greater due to this war. So next slide is about commodity prices getting impacted due to this escalation. So jet kerosene prices have increased, gasoline prices have increased, liquefied petroleum gas has increased, urea prices have increased. So there is a decrease in aluminum prices. So there is a fear of recession or slowdown in industrial activities, which had impacted the prices for aluminum. So now, what is the impact of oil price increase for us, for India, in terms of GDP and all those things? So clearly, the physical deficit for us as a percentage of nominal GDP has declined. So whatever the net import that we were making in terms of percentage of GDP, the value has decreased over the years. In 2018, it was 5%. Now it is about 3%. So dependence of the oil price has decreased in terms of the size of the GDP that we are currently. So also oil intensity per GDP. So there has been less oil consumed per percentage of GDP, per dollar of GDP that is there. So this is the trend. Oil prices have also, this is long-term trend towards declining. So long-term, we are not getting much affected as earlier we used to do getting more impacted due to oil prices. So due to this war, there is clear selling which is happening. FPI and DI flow over here, you can see there is lowest point in the last 1 year. The lowest point in the month of March. Also, the FPI have sold a lot in March. This is the last 1 year data over here. You can see net outflow of 10.8 billion, which had happened, and this is the data only for 18th of March. Only 18 days of March. That's the highest, selling done by foreign portfolio investors. So, this is the data that was there. We have gone through about 17-18 slides. We'll catch up in the next video. Thank you for watching, and please do connect with us at Money Works for You for your mutual fund journey. Thank you.